Aloha and welcome. I'm Glenn Kosgue. I am a resource connector with the Office of Economic Revitalization. Our mission is to connect small businesses with resources to help them thrive and create good jobs for our community. This talk story video will help small businesses understand different types of funding. We know access to funding is always the top of the mind of local companies. Our guest today is Reid Chung, Vice President at HawaiiUSA. Reid has spent his entire career in the financial sector and has a deep understanding of access to capital. Aloha, Reid.
Hi, Glenn. Good to see you again.
Yes. Okay, let's start our session with our first topic. Can you please explain what capital is for small businesses?
Yeah, great. In my entire career, capital for small business to me is the lifeblood of the business. It's how the business stays alive. I look at capital in two ways. There's capital from the perspective of the business owner, and then capital from the perspective of the lender or banker. Right. So from the business owner standpoint, capital again keeps the business moving. It keeps the business thriving. It oftentimes sustains the business until cash flow can catch up. From a lender's perspective, capital is something that we're lending out. We're helping the business. We're helping to finance operations, purchases, things like that. So it's something that we can extend to help business owners, sustain.
Okay, thank you very much. Mahalo, Reid, for that. What are some types of barriers that some small business may face when accessing capital?
Oh, there's a lot. So with small businesses itself, a lot of times people get into business and they're not prepared as far as getting capital, right? So, and even for myself, when I first started meeting business owners, you don't realize how many business owners, they're so focused on the product or service they're providing that capital is the last thing they're thinking about, right? So until you actually need it. And so to me, capital, there's a lot of things you need to do to prepare. A lot of loans nowadays are based on personal credit history of the individual owners, right? So making sure that personal credit scores for you as a business owner, those credit scores are good. You're paying your personal bills on time. You're not taking out too much debt yourself, right? And you're managing expenses. Budgeting for the business itself, right? So when do you even understand you need capital? So as a small business, a lot of times you'll go to that first as like a way to resolve your issues. I need to get a cash flow injection from a bank or from some sort of investment or something. For the business owner, that may not be the first thing that you need to look at, right? So understanding your business and cash flow enough to understand when I need to borrow. Preparing yourself with collateral, right? So nothing in this world is free. A mentor once told me. So you have to have it backed with some sort of collateral. So as a business owner, that could mean your personal home. That could mean personal assets. That could mean assets owned by the business, right? It could mean monies put in through investment that may need to be put up for collateral, bank accounts, investment accounts. So it could vary, but having that source of collateral as that secondary source of repayment in case cash flow goes away is very important for the business owner. And then assessing who the lender is. I think preparing that way and really understanding what's available to you out there. Right? For a startup business who's maybe less than 2 years, a traditional bank or credit union may not finance some of their business endeavors. So you may have to look untraditional routes. A lot of people look at personal finance, right? So can I finance this through my own personal debt? Family and friends. They go into investors. Can you invest in my business for a stake in the company? SBA, the Small Business Administration, right? So they have a lot of loans, grants, and programs that are built to help small businesses that are just starting off. So it's dependent also on where you are in your business life cycle to prepare yourself on getting capital.
Yeah. So what do a business do if they don't have a collateral for their loan or capital?
Yeah, I think it's important for the business owner to understand when you come to a lender, there's two things we're looking at primarily, right? One is the primary source of repayment, and so that's cash flow from the business, right? So normal operations of either selling a good or service, right? How am I taking in income? And then what am I using that income for to pay my bills? And how much is left over to service debt, right? So it's cash flow for the business that's primary. Secondary to that would be collateral, right? So a secondary source of repayment could be revenue coming out from different generation of sources. It could be an asset that you hold that would be a secondary source of repayment if the primary source were to fail, right? So collateral could mean a lot of things to the business owner, but lenders typically look at two things: the primary source of repayment, cash flow; secondary source, what do you own as collateral that we could use in case the primary source doesn't work.
Okay, great answer. Okay, Reid, how can a small business overcome those barriers and put itself in a position to get funding?
Oh, so there's a lot of things a business can do to prepare. I think, first of all, when you're you're the business owner, right? So you're sitting in those shoes. I think it's understanding the personal risk, right, behind it. Like I said, dependent on the type of business and the industry you're in, and where you are in your business life cycle, you really have to assess: do I really need to borrow? Right? There are times where cash is needed to help sustain a business or even grow it. There are times that I think I've seen in the past, business owners will jump to going and taking out loans or lines of credit, and they may not be ready or they may not need it necessarily for the business, right? A good seasoned banker can help you identify where those checkpoints are in your business life cycle that you can say, hey, identify here that I think you need a working capital line of credit. I think your business is ready for that. Or I think you need a loan to purchase this equipment because you need to save your cash for something else. Or maybe you need it to flow payroll, or maybe you work with the state or federal government and you receive payments periodically, or it's an extended period of time before you see payments, right? So maybe you need something to float you in between. So I think having somebody help you understand, where am I in the life cycle of my company, where am I cash flow wise, and a seasoned banker can look at your balance sheet and your income statement and they can help you determine that. And then really preparing myself to take out the debt. To me, a business loan is kind of like taking out a mortgage, for an individual. It's oftentimes going to be the biggest piece of debt that you're going to see from a business standpoint, right? So what am I going to do if I can't service that debt? So really understanding, is my business ready for that? A lot of times people start businesses, they don't even have the money to start, right? So they have a good idea, they're able to execute, but maybe they don't have the funds or finances to be able to back that idea. That's where lending can help. But again, you have programs like the SBA loan program that can help offset some of the risk for a lender like myself to be able to jump into that transaction and say, I can help you. So there are different ways that you can work to prepare. But I think it's really understanding, do I need the debt now? Is my business ready for it? And am I ready to take on that risk?
Yeah. I guess, those type of decisions are what torments some of the business owners, because they don't know. Most business owners don't like to take out a debt because, the business is doing okay, but, to get over that hump, if they want to expand, they might need some capital to, expand their business.
Yeah.
Right.
I think it's a sensitive balance, right? So when you're talking to a business owner, every business owner wants to expand, right? They think, I'm ready for growth, right? Oh, I had a successful quarter, a successful year, I'm ready to grow my business. But it's really helping them understand the maturity of everything, right? Is it consistent cash flow? Are you really able to count on it?
Yes.
Have you put away to help finance future endeavors of the business? If not, you spent that all on operations, is it smart now to continue to grow, right? Or maybe you work on tightening up operations, cutting expenses to make sure your cash flow is really solid. So it's really hard to have that conversation, because I think naturally business owners, they're in the mindset where I want to grow the business, right? I want to get bigger, I want to earn more, right? So how do I do that? And I'm going to look to a lender to be able to help leverage what they have to help me, right? So it's a sensitive balance.
Yeah. I think the one thing that the business owners got to realize is that they got to be open and upfront with the banker, so they can assess what their business is at their point of, if it's good to expand or if it's good just to hold steady for now, and then maybe in the future they should they have a time. It's I guess a matter of timing.
It is. Sometimes it's timing, and the banker's not going to have all the answers, right? So I would be naive to say the banker's going to help you through every single part of your business, right? We're going to be here to help with the financing part when necessary, but we're not going to be able to tell you how to run your business day to day, right? So we're not in it with you. We don't understand the day-to-day workings of growing a company. So a lot of it is trust built between the two entities, right? So the business owner has to be ready and prepared. They have to be able to exhibit to their partner on the lending side that we're ready to do this. Right? And the banker has to have faith and belief that the business owner is going to fulfill their obligations, right? So really preparation in this case comes on both ends. We're really going to have to earn that trust with each other.
Okay. Thank you, Reid, for sharing this great information with our audience. We have more videos about small business funding and other essential topics. If you have any questions, do not hesitate to contact us at BCE, Boy Charlie Eagle, at honolulu.gov, G-O-V. And thank you.